Welcome, everybody. My name is Martha Johnston. I'm the Director of Education at the Finance Authority of Maine, and this is our monthly series called the Financial Check-In with FAME. And so today we're actually going to be talking about refinancing and consolidating student loans and how that could help you with managing student loan repayment, but we'll talk about other aspects of managing student loan repayment as well. So we are all very pleased that you could be with us today. Joining me is Mila Tappan, who is our Manager of College Access and Outreach. And she will be monitoring the chat for any questions that come up. I will try to remember to stop periodically and check in to see if there are any questions. And then we will, as you know, we are recording this webinar. It will be available on our website, but I always send it out to everybody who has registered for the webinar. So even if you have colleagues who registered but couldn't make it, they will get a copy of the recording by early next week. So having said that, let's go ahead and jump in. I have already introduced myself. And today's agenda, we're going to talk about federal student loan consolidation. We're going to talk about education loan refinancing. I've kind of chosen the words very carefully to distinguish between what's available for federal student loan consolidation and private education loan refinancing. So I'll talk about that more. We will talk about federal student loan forgiveness programs, but I will warn you all, boy, with everything that's been going on lately, with different aspects of student loan forgiveness and different waivers. That topic in and of itself was a webinar that we just did 2 weeks ago. So I will point people back to that webinar. And again, I'll mention that as we get to that slide. We'll talk about student loan repayment programs, education tax benefits. We will talk about getting your financial house in order because I think it benefits all of us to examine our budgets. And it is one of those levers that we can pull as it relates to college affordability, or in this case, managing student loan repayment. We'll talk a little bit about Repay, Restart. That's kind of our nickname for the fact that the student loan payment pause, which started almost 3 years ago next month, related to the pandemic, that will be coming to an end. And then, of course, we always try to share resources for successful student loan repayment in this case, but FAME has many resources that you certainly can visit our website to learn more about. All right, so consolidation and refinancing, they are similar, but they are different. And so I think it's always good just to open with a basic understanding of how they are similar and how they are different, because they do get conflated, they get mixed up, they get talked about using the same terms interchangeably. And as we know, student loans can feel like a very complicated topic. So we just want to make sure people are really clear. So they're similar because they do take the concept of combining multiple loans into one new loan. Now, theoretically, especially on private refinance, so if you have a private education loan, you could just refinance one single loan. But with federal consolidation, it's typically bringing your federal loans into one new loan. So combining loans into one payment. Whether it's a private refinancing loan or a federal consolidation, you know, a longer term could mean a lower monthly payment. Now, I am fully aware that a longer term could also mean paying back more interest. So we'll talk about why people might elect to do a longer term and different strategies you could use to lessen the amount of interest you pay back in totality while you're paying back that loan. But how are they different? Well, consolidation really has become a ubiquitous term as it relates to federal student loan consolidation. And federal student loan consolidation does have a weighted average interest rate. I will talk about that a little bit more in some of our later slides. Refinancing is a private, if you will, often referred to as a private student loan, private refinance loan, but it's a credit-based student loan with a new interest rate, regardless of the interest rates of the loans that are being refinanced. So that's the biggest way they're different. Consolidation, federal consolidation is not credit-based. Refinance is credit-based. And again, we'll talk about that a little bit more. Now, I mentioned the weighted average on the consolidation loan, which I'll describe in more detail. With a private refinance loan, typically people are choosing whether or not they want a fixed interest rate or a variable interest rate. And in a rising interest rate environment, people might be opting for a fixed rate because they like the certainty of knowing what that monthly payment's going to be, what that interest rate is, and they could always refinance later if rates start dropping again. So as we all know, we are in a rising interest rate environment. So that's something to keep top of mind as you work with students or consider for yourself managing your student loan payment. So federal student loan consolidation, combining federal loans into one new federal loan. So you can't take a private education loan and bring it into a federal student loan consolidation. You can only bring other federal student loans into a federal student loan consolidation. The weighted average is depicted here in the infographic, so hopefully it's clear, but I'll do my best to explain it. Essentially, if you're bringing a student loan in at $20,000 with $20,000 balance at 6%, another one at $5,000 balance at 8%, and then finally a third one at 5% with a $6,500 balance, at the end of the day, you're going to have a weighted average that resembles the loan that has the biggest balance. That's where the weight comes in. So in this case, the weighted average of the federal consolidation in this example is 6.1%. And that's because the largest balance loan you're bringing in is at 6%. So hopefully that makes sense to people. But again, it's not a brand new interest rate. It is a weighted average, and it is actually rounded up to the next 1/8% when you apply for that. That's just a little detail there. So the pros and cons of consolidating your federal student loans. Obviously, one payment to one servicer is a big pro, especially for students who are just starting out managing student loan repayment. You know, one of the things we used to counsel on when I was a financial aid director is really making sure that you keep track of your loans, because one thing that could happen to students when they're just starting out is actually losing touch with their servicer and then defaulting inadvertently, not intentionally at all, on one of their student loans. So one payment to one servicer is certainly a benefit. The fixed interest rate that you get with that weighted average interest rate is great. You have different repayment plans that are still available because these are federal student loans. And then you also still have the federal deferment and economic hardship options that are available. There are some downsides to consolidating federal student loans. So there's no do-overs. Once you consolidate them, you're done. You've consolidated them. If you have an older federal family education loan program that had lender benefits, now these would have been prior to 2010. Once you consolidate them, you lose those lender benefits, if you will. But we're pretty far out from 2010, so there's probably, there's a few people out there that have old loan lender benefits, but that might not be as much an issue, especially for borrowers who have graduated, in the last 10 years. And you heard me mention previously, student loans from private lenders cannot be brought into a federal consolidation. So those are things to remember. And then some benefits actually do go away. So some federal loans, notably like the Perkins loan, have cancellation benefits that go away. So you want to be careful. We used to counsel students, don't consolidate your Perkins loans in case you're trying to pursue some kind of cancellation benefit. And that would still hold true. So just, it's not that's a federal consolidation is not a bad thing. It's a tool to help you manage student loan repayment. You just want to make sure you do it thoughtfully and keep in mind all the considerations that could impact your situation. So private education loan refinancing. Again, I tried to choose my words really carefully so I could distinguish between federal student loan consolidation and private education loan refinancing. So again, combining education loans into one new education refinance loan. Typically, people will do this for their private student loans that they took out when they were students, but most education refinancing programs will allow you to bring in a federal student loan. So if you wanted to bring your federal student loan into a private education refinance loan, you can do that. But we would caution you before you do that, and we will talk about that more in just a couple slides. So again, it is an option for most products out there for education refinance, because the only requirement is that what you're refinancing with them was an underlying education loan, whether it was with a private lender or whether it was with the federal government. Education refinance loans are credit-based, which means a credit score will be looked at, a debt-to-income ratio will be calculated, and you most likely will have to provide verification of your income. Changing the rate to a fixed rate is one reason why people will often look at an education refinance loan. I worked with a young professional recently who had multiple loans with a private lender. Each of those rates was in probably the 7 to 10% range. And in his case, he really just wanted to have the certainty of having a fixed rate that he could predict that monthly payment and feel comfortable. And then he knew with the rising interest rate environment, because he did his refinance about 4 months ago, he knew that if he wants to refinance in the future, if rates go down, then he could at that time. In the case of the student that I was helping, or the former student, I should say, young professional, all of these were private loans. And again, the ease of having one payment for one loan at a fixed rate was really what this person was seeking. So I call it the trifecta, but if you can manage to get a lower interest rate when you refinance education loans, if you can reduce your monthly payment, and if you could shorten your repayment term, that's the trifecta, right? That's the ultimate. I think in a rising interest rate environment, that's probably going to be a little bit more challenging, but people might be electing to do education refinance again because they want the certainty of knowing the future of a fixed rate. Certainly there are variable rate products. I will not tell you that that's bad, because everybody has to make the choice that's right for them. But those are some of the things that really drive people's decision making. And then down in the right-hand bottom corner of the screen, you'll see a little snip from Fame's website. We provide a lot of information about what to think about before you consider refinancing your student loans. And we try to go and make sure people understand the difference between consolidating and refinancing, but it can get a little tricky when you're using those terms interchangeably. So the website that I referenced, famemaine.com/the loan for me, that actually is where you can go, where we provide information for Maine people about local Maine options to refinance your education loans. But also we have information about finding lenders that you would want to work with while you are in school. It is always part of our protocol, especially with Mila's team, because her team is out on the road providing financial aid counseling and guidance and how to fill out the FAFSA. It's always our recommendation that you exhaust your federal student loan eligibility first, but that if you do need to borrow a private student loan, then certainly we want to make sure you know what your options are in Maine with Maine lenders. And that holds true for refinancing. So if you're someone who has already graduated and you have private student loans that you want to refinance with a Maine lender, you can come to the Loan for Me and you can find out what Maine lenders are offering refinance. And we do have a few lenders that are offering fixed rates on a refinance product. So the website is intended to provide helpful information through frequently asked questions, videos, tools, calculators, anything that you might need to make an informed decision. And again, we don't think there's necessarily a good decision or a bad decision, but an informed decision is really what we consider to be the best decision. And it's informed based on what's important to you and what your goals are. Now, the caution I referenced earlier a few slides ago about whether or not it would be wise to bring a federal student loan into a private refinance. What I would say is, if you're pursuing any kind of federal student loan forgiveness, in particular, we think of public service loan forgiveness, then you would not want to include any federal direct loans into any kind of a private education loan refinancing. Again, once you pay off that federal loan with a private loan, it's no longer a federal loan. It doesn't exist, and there's no way to go back. There's no do-over, if you will. So if you're pursuing any kind of federal student loan forgiveness, you do not want to bring that into a private refinance. We always are very cognizant of the fact that there will be organizations or people that will take advantage of times when we're all feeling vulnerable. And certainly that has been the case during COVID. So beware of student loan debt relief offers or credit repair deals. Student loan debt relief companies that charge a fee for information you absolutely can get for free. And you can always give Fame a call if you have any questions. And certainly you'll have my email after this webinar. You can always shoot me an email. And if I don't know the answer, I can at least point you in the right direction to find an answer that you need. So what are the potential benefits to consolidating or refinancing student loans? Well, I guess I'm going to start with the last bullet first, which is you want to make a plan to manage your student loan repayment, and consolidating and refinancing your student loans can become part of that plan. So it could be that When you do a consolidation loan, a federal consolidation loan, you elect a longer term. And by doing that, you have a lower monthly payment, which makes for more money available month to month for your monthly budget. So reducing financial stress related to a better monthly cash flow until you're in a stronger financial position is the reason a lot of people will consider consolidation or federal private refinancing. For some people, it's really important. They want to stay and live and work in Maine, and they don't want to have to chase high salaries in more expensive markets. So that ability to refinance a private student loan or consolidate a federal student loan and get a lower monthly payment might mean the difference between being able to stay in Maine or moving out of state because you need to pursue a higher income. So we think, that's an important thing for people to consider as well. It could be too that you want to pursue other financial goals, and so you want to free up extra money month to month, whether it's to pay off other debt, whether or not you want to start pursuing home ownership, or maybe you want to start a business. So the idea of taking a longer term with a lower monthly payment to pursue those other goals is not necessarily a bad thing. But I did mention that I would give you a tip for how to make sure you don't pay back too much interest in the long term, but it does involve a certain amount of discipline. And I'm not sure I'm the right person to say that. I'm not sure I would be disciplined. But once you pay off some of those other debts, or you start to get enough money put aside for the down payment on a home, if you go back and make extra payments on that consolidation loan, on that refinance loan, then in the long run, you can reduce the amount of interest you pay back over the life of the repayment on that loan. So no prepayment penalty, but again, it does involve a certain amount of discipline. And I'm really happy to say I've encountered so many student loan borrowers in the last few years who have actually done exactly that. They have worked very, very hard to pay off their student loans by focusing on smaller debts first and then doing what we call snowballing, right? So once something's paid off, they take the extra money that's been freed up and they make a bigger payment on the next debt they're trying to knock down, and student loans can become part of that. So the goal of all of this, whether it's consolidating or refinancing or doing neither, because that's always an option, the goal is to make repaying your student loans more manageable to you, so that you can hit those other goals that you have, those other financial, business, or life goals. And again, it can just be part of your overall plan. So federal student loan forgiveness, such a hot topic. So right now, many of you probably know, or I hope many of you know, that there was a proposal by the Biden-Harris administration to provide one-time debt relief of up to $10,000 or up to $20,000 if the person receiving the debt relief had been eligible for a Pell Grant when they were an undergraduate student. There are some states that have sued to block that debt relief from happening. So the debt relief was launched back in the fall. There was a great simplified application. A lot of people completed it. It took almost no time at all to complete. And then the lawsuit happened. And what you see now when you go out to the website is that student loan debt relief has been blocked. So when we say blocked, just think of it as being paused for now, while those cases, or that case, is being heard in the Supreme Court. So the Supreme Court will actually be hearing arguments this month in February about the merits of blocking this one-time student loan debt relief, and they will issue an opinion. Now, most times the Supreme Court will start issuing their opinions in the late spring, early summer. I have also put information on this slide about when the student loan payment pause will end, because these two things are now connected. So the U.S. Department of Education has basically said that loans will go back into repayment 60 days after the Supreme Court issues its opinion about whether or not the one-time debt relief can go through, or 60 days after June 30th. So whichever occurs earlier. So if the Supreme Court were to issue their opinion, say in March, then loans would go into repayment in May. If they haven't issued an opinion by June, then loans will go into repayment by the end of August. So end of June, end of August, so 60 days. I'm going to stop there because I do see one item in the Q&A, but I didn't look at it, Mila. So I will ask you what the question is.
Yeah, I thought it'd be a good one for you to address, Martha. The question is there a way to refinance a federal loan or a portion of a federal loan that's in a parent's name? So I'm assuming a plus loan for a student to the student who has now graduated.
Sure. So it does depend on the lender. So what you're talking about would certainly be a private education loan refinancing if you're trying to get the parent loan, which was a federal loan, into the former student, now hopefully a graduate, into their name. In the past, I have seen lenders that will allow that only if both people are on the refinance loan. So the former student whose parent took out the loan on his or her behalf, and the parent would need to be on that private refinance loan, at least initially. And that's because the underlying debt that was the federal parent loan only has the parent name on it. So they'd have to be a party to the new loan. Once you've done that, then you could refinance, say a few months or a year from now, and refinance so that the student, the former student, the child, if you will, gets credit approved on their own, and then the parent can be dropped off of that refinance. I hope that makes sense, but whoever asked the question, if there's any follow-up, feel free to shoot me an email, and I will provide a more detailed answer or address anything that this answer is making you think of. So again, if you're trying to take a federal plus loan and get it into the student's name, the only way to do that is to take that federal loan and make it part of a private refinance loan, and that might require both the student and the parent, at least initially, being on that approved loan application. I don't want to skip over the fact that the parent could theoretically consolidate their own plus loans, but again, that would be in their name. So it doesn't achieve the objective based on what the question is asking, which is how to get that loan into the student's name. So I will pause there. Mila, if you want to add anything, feel free.
No, I thought that was a great answer. And but if there are still questions about that or new questions that arise as a result of that answer, drop them in the chat or in the Q&A and we'll address them.
Yeah, and you could also find a private refinance lender that might not require the parent to be on that new refinance loan. It might be enough if you can document that the loan was for the student. So I think you just have to do a little bit of homework with those lenders who are offering refinance. I just happen to be familiar with a product where they did require that the parent had to be part of that refinance because of the underlying loan being in their name. And hopefully everyone likes the elephant in the room picture, but the elephant in the room, of course, is whether or not the Biden-Harris debt relief will go through. I did actually provide a link to the student aid website that talks about the debt relief. I think it's really good just to learn what the qualifications are for the debt relief. And then everyone keep your fingers crossed. Maybe that will go through when the Supreme Court hears those arguments, or when they issue their opinion, I should say. Let's make sure I'm okay for time. So I did also want to talk a little bit, very briefly, about public service loan forgiveness. We often refer to it as PSLF. And I wanted to talk about what I'm calling income-driven repayment forgiveness. That might feel a little confusing. In order to get public service loan forgiveness, you do have to be in an income-driven repayment plan, and those happen to be the 4 that you see listed here. But you could be someone who's not pursuing public service loan forgiveness and be in an income-driven repayment plan and qualify for forgiveness after you've been in repayment for 20 or up to 25 years. So those are 2 different types of federal student loan forgiveness that I just wanted to make sure that I called out today. Public service loan forgiveness, you have to make 120 qualifying payments. You have to be in a qualifying repayment plan, so income-driven repayment plan, and then working for a qualifying employer. The income-driven repayment plan forgiveness, the big general one, you can see that forgiveness happens again after 20 or 25 years of repayment. Now, the reason I'm not going to go into more detail today, quite frankly, is because this topic in and of itself has been the subject of many webinars that FAME has been hosting since basically last May. And And we just hosted one recently on January 25th. We did that in partnership with the State of Maine Treasurer's Office. We did actually record that webinar. It was conducted by a national expert and student loan advocate, Betsy Mayotte, who's the founder of the Institute for Student Loan Advisors. I highly recommend, if you think you might be qualifying for public service loan forgiveness, or if you have been in repayment on your student loans in an income-driven repayment plan, and you want to understand whether or not you'd qualify for that income-driven repayment plan forgiveness, I think you definitely want to take the time to watch this webinar. Part of the reason I say that is there are certain waivers that have been in place last fall related to public service loan forgiveness, but currently related to IDR. And these waivers make payments that previously wouldn't have counted now count. So I think it's really important information, and I hope that you will take the time to view that webinar. It was just an hour long. I think maybe we ran over by 5 minutes, and it is all still current and fresh information. It was only presented 2 weeks ago. But that's why we're not going to go into detail on that today, because there's so much information. It really is a standalone webinar at this point, but I wouldn't be doing justice to this topic if I didn't at least point you to the recording, and certainly to Betsy as a source for any of your really detailed questions. So you can always email tisla@freestudentloanadvice.org. Betsy really is just an amazing advocate and a national expert. So we are so lucky to have a very strong relationship with her in the state of Maine, where we can call on her to help us provide this information to Maine borrowers. So student loan repayment programs. Well, what does that mean exactly? Well, basically, student loan repayment programs are payments made to your student loan by a third party in exchange for service or a work commitment. It's very common with healthcare professionals, especially when there's maybe a shortage area. So that might be the first thing that pops into your head. We have actually administered other types of loan repayment programs. In particular, there was a program we administered called the Alphon Leaders Program, which was student loan repayment for STEM professionals. Now that program right now is currently on pause. It actually might come back. The foundation is considering what they want to do with the program in the future, but FAME has administered that program in the past, but we do have other programs that we administer related to healthcare professionals. And so I do want to touch on those right now. So first of all, these are not FAME administered programs that you're looking at right now on this slide, but they are ones that I want you to be aware of. And so there are federal student loan repayment programs. Again, think about that. In exchange for work in a certain area or in a certain field, the federal government makes payments on your student loan. So there are ones offered through the Health Resources and Services Administration called HRSA. Many people have heard of the National Health Service Corps as part of that. There are also state loan repayment programs. And so we don't want you to leave Maine, but if you know someone who's been dying to go move to Iowa, Iowa would have a student loan repayment program that they could look at if they're a healthcare professional and working in an underserved area. But you'll notice the last bullet, Maine does actually also have a student loan repayment program, and that's predominantly limited to primary care physicians working in shortage areas. And that one is administered by the Department of Health and Human Services. So it's a Maine program based in Maine, loan repayment in exchange for a healthcare provider working in a high need area as defined by the Department of Health and Human Services. So you could always get more information about that. But again, many states have state loan repayment programs in exchange for working in a shortage area. And again, healthcare related. Some people will often ask, well, are these loan repayments taxable to me? Well, in the case of the healthcare provider loan repayment programs, this actually is a snip from the IRS publication 970. And so it is not taxable at the federal level. You would have to check to see whether or not it's taxable at the state level. In the state of Maine, I'm 99% sure it's not taxable at the state level. We are not tax experts. I'm doing that off the top of my head. But I mostly just hesitate when I say that related to the 49 other states, right? So if you're getting student loan repayment in Iowa, the example I used before, I don't know whether or not that would be taxable for Iowa state tax purposes, but not taxable at the federal level. And if you wanted to learn more about that, we've referenced a link to the IRS publication 970, which has all the tax benefits for education in that. So we do have debt reduction and loan repayment programs that are administered by FAME. I've provided a link to those programs. We basically have 3 programs right now that we are administering. One is for healthcare providers. It was a pilot program that was funded with the ARPA funds or the MJRP, Maine Jobs and Recovery Plan Act funds. So those have been fully committed for now. But just in case you're curious what that program looked like, we do have a dental loan repayment program that we administer, and we have an application cycle that we post every year. So the difference between dental loan repayment or loan forgiveness, if you think about loan forgiveness as I took out a student loan knowing upfront that if I did certain things at the end of that period, the loan would be forgiven. So think about public service loan forgiveness. I took out student loans. I knew if I worked for an eligible employer full-time, did everything I was supposed to do, then I could get my loan forgiven at the end of 120 payments. Educators for Maine, another program that we administer that's a forgiveness program. So I go to school to become a teacher, I come back to Maine and I provide return service, and in exchange for my return service, my loan is forgiven. A loan repayment program is different because you do not have to be a Maine resident to have received it initially. So for instance, I grew up in California. I became a dentist by going to a California dental school, but I saw that Maine has a dental loan repayment program. And I really have always wanted to live in Maine and work in an underserved area. You could actually apply for our dental loan repayment program, move to the state of Maine, become a licensed dentist, sign a contract with us, and in exchange for your service in an underserved area, we would pay off a portion of your student loans. So hopefully that makes sense, the difference between loan repayment versus loan forgiveness. And then the last one listed on this bullet is nurse educators. And so it's been widely known for a long time that we've really had a shortage of nurses and nurse educators in particular. So FAME did receive, again, federal funding through the American Recovery Plan, ARPA. And when we put it in the state of Maine, we called it MJRP, Maine Jobs and Recovery Plan Act. And so we are administering a program specifically for nurses who are educators in our higher education institutions. So again, the idea being that if we get all of those nurse faculty positions filled, then we can help increase the capacity of nurses who are coming through our education system and graduating and working in the state of Maine. So you can always check out those programs at our website. The other thing to keep in mind is there could be an employee benefit where you're working, and it could be part of their hiring package, but they can also offer up to $5,250 in repayment toward your student loans, and that would not be taxable to you at least until January 1st of 2026. So, these are things you might not have thought of, but you should check with your employer to find out if they offer that as an employee benefit. So again, different ways to help with and manage student loan repayment. So education tax benefits, you heard me reference earlier the publication 970. It's actually, I think, a pretty well done publication. Maybe I've been reading it for too many years because of the work that we do, but I do think it's pretty clear when it comes to the tax benefits for education and for loan repayment. So I definitely would recommend you taking that time to see if there's any tax benefits that you could be qualifying for by taking a look at that publication. One thing that I do like to make sure is that people understand the difference between a tax credit and a tax deduction. So I'm going to talk about tax credits first. Basically, tax credits reduce the amount of tax that you pay. So you think about it as a dollar for dollar reduction in your tax obligation. And so that's a very rich benefit. In the example on the slide, if you owe $5,000 in taxes and you receive a $2,000 tax credit, then you would ultimately only owe $3,000 in taxes. So again, really nice when it's a tax credit, dollar for dollar reduction. Sometimes your tax credit is refundable. So if you owe less in taxes than the amount of the credit that you qualify for, you could actually get a tax refund. So in this example that I've given you, someone very simply owes $1,000 in taxes, but they're eligible for a $2,000 tax credit. They would get a $1,000 tax refund. So again, that's a tax credit. So staying on the theme of tax credit, Maine has a new tax credit called the Student Loan Repayment Tax Credit, SLRTC. That doesn't exactly flow off the tongue. And it's for tax years beginning on or after January 1st, 2022. Now, some of you may have been familiar with Opportunity Maine, also known as the Education Opportunity Tax Credit. This SLRTC replaces the it replaces the Education Opportunity Tax Credit. And a person can get up to $2,500 annually in a refundable tax credit based on their student loan repayment. It's available to anyone who obtained an associate, bachelor's, or graduate degree from any accredited college or university after December 31st, 2007. And the program does have a lifetime credit cap of $25,000. It's actually a really rich benefit. Now, because EOTC did exist first, there is a bit of a phase out that's happening. So there are people that could still claim EOTC for previous tax years if they haven't. So if they have unclaimed eligibility, they could file amended returns. And then the other thing is that there was a refundable portion of EOTC related to if you were a STEM major. So there is going to be a one-time exception for this year where someone could actually claim a higher credit if they were a STEM major. Now, I've provided a link to the frequently asked questions document on the main revenue site. Question 4 in particular is where the phase out items are talked about, but it's actually a very well done Q&A by main revenue. And so I highly recommend taking the time to look through that to see if you might qualify for SLRTC. If you had a question, Mila, I can see your camera went on.
Helps if I unmute myself at the same time. Yes, we do have another question. It's not specifically about Opportunity Maine or the student loan tax credit, but back a moment ago. Okay, if I ask it now?
Sure.
Okay, so while looking at consolidation, so am eligible for public service loan forgiveness, it states payments will begin immediately. Does this eliminate me from any Biden forgiveness and or pause?
So no, and I'll qualify that. And then you are also an expert on this, so you have to chime in case I don't say anything quite right. So when you do a federal consolidation loan, because we're in the middle of the repayment pause, you actually wouldn't go into repayment on that brand new loan until the payment pause is officially ended. So that window's closing. We know that we're all gonna go back into repayment if we have federal student loans by August at the latest. So that window is kind of closing. If you are someone who is trying to pursue just that IDR forgiveness or public service loan forgiveness, the Biden-Harris forgiveness does not exclude you from that, and vice versa. Trying to qualify for those types of forgiveness does not exclude you from the Biden-Harris forgiveness. So for instance, I'll just use an example. Say you have $25,000 worth of debt and you received a Pell Grant and the Supreme Court lets the Biden-Harris program go through. So that's the real big factor there. You could qualify for up to $20,000 in loan forgiveness. And then that remaining $5,000 would be what you're continuing to pay on. And if you happen to be toward the end of your public service loan forgiveness commitment, and I don't know, say it was 2 years from now, you had $3,000 left, then that $3,000 would be forgiven for the public service loan forgiveness. So hopefully that makes sense. I think as far as the federal government's concerned, it doesn't matter to them which pot it comes out of, whether it comes out of the Biden-Harris pot or whether it comes out of the pool of funds for public service loan forgiveness. Did I get it all?
Works for me.
Okay.
So I don't have anything more to add, but again, like before, if there are other questions, go ahead, put them in the chat and we'll make sure they get answered.
Great. Again, just checking my timing to make sure we're okay, and we're doing pretty good. All right, getting your financial house in order. Hopefully this doesn't seem too rudimentary, elementary, but it's so important for all of us at all times to revisit our monthly budgets or our own financial situation so that we can pull the lever that we can pull related to whatever it is we're trying to achieve. And in this case, managing student loan repayment. So if you haven't done this, I highly recommend that you go to fame.enrich.org. That is a free digital platform. Your information is not sold to anybody. It's not shared with anybody. Fame purchases it on behalf of all Maine people. And it's a financial wellness platform. So you can actually sign up to have an account. The information that you receive will be customized based on what you've indicated your interests are as it relates to learning more about finances, financial education. But if you can do the money personality test, that is a fabulous tool. And it really just helps you examine how you make decisions about money, who influences you, how you think about things, and it might also help with other people you're trying to help. So in my case, my son or daughter, very different money personalities, but knowing my money personality, I can see some of that in them. Now, have I got them to successfully sign up yet? No, they're recent college graduates, and so I'm still harping on them to do that. But I definitely recommend doing fame.enrich.org for the money personality. Get organized, right? That's a simple one, but I think it's always worth our time to go back and get organized with our expenses. Now, I don't use this app, but I'm thinking about it. You know, there's apps out there that can actually figure out where your subscriptions are. So do you have like old subscriptions that you're continuing to pay for that you don't even use anymore? That to me falls under the category of get organized, but also spending leaks. You know, so it never hurts to kind of sit back, list those expenses again, use that app to figure out if there's some old subscriptions you're still paying for that you're not using. And then do take a look at your spending leaks. Can you make your own coffee? Do you have overdraft protection that doesn't charge a high fee? I know that my credit union is fabulous. I have overdraft protection. I'm charged interest if I use it, but I'm not charged a fee for tapping into it. And that's a really important thing. And then also recognize impulse buying. Is this something that you want, or is it something that you need? I was very tempted on Facebook Marketplace this morning, so I guess it's a really good example. It's a great day that I'm doing this presentation. I thought, oh, I really want that piece of furniture. And then I thought, well, I don't really need it. And I have some other things I'd like to do. So, you know, I quickly went in my own head and said, want, need. Okay, I'll skip. So create your spending plan and evaluate it regularly. So you've already heard me say that a number of times. And then reduce expenses any way that you can, whether it's food costs by cooking more at home. And, you know, certainly the pandemic forced that issue in our household, and I'm really grateful for that. Cell phone, internet, and cable. Does anyone still have cable? Oh my goodness, we do. My 25-year-old son is harping on us to move to streaming. He's convinced he will save us a ton of money in our budget. We just haven't been able to successfully convince his father yet, but that's something to keep in mind. Travel expenses. Can you use credit card points for travel? Are there times where you could bike or walk instead of, you know, taking the T, I suppose, if you're in Boston or other areas? And then look for free banking. You know, anything and everything really, really helps. And so I know it sounds, like I said, rudimentary, elementary, but why not? It can't hurt. And then take control of your debt. Avoid the minimum payment trap. You know, and I think we've all been there at one point or another in our lives. Obviously, if you do have a credit card, only spend what you can afford to pay off in full at the end of each month. Pay off your higher interest rate credit cards and loans first. Oh, and then you heard me talk earlier about snowballing, just because I love this concept, but consider snowballing. Pay off a low balance debt first, then use the freed up money to make bigger payments on the next debt that you want to pay off. So you're snowballing. I just always think that that's such a fabulous concept. And then certainly establish emergency savings, even if it's modest. So, you know, that's incredibly important to make sure that you have that emergency savings, because that's usually what blindsides somebody, right? Or kind of like knocks them off their path. They've been really, really good, but they didn't have that extra money put aside because they need, you know, 4 new tires because they can't get just one. They have a 4-wheel drive or something like that, you know, things that always catch us off guard. So I already put this on the screen earlier, but I'm doing it again because I think it's really important. So finally, after many, many months and 3 years, the student loan payment pause will be ending, right? So student loans are going to go into repayment 60 days after the Supreme Court issues its decision about the Biden-Harris debt relief, or 60 days after June 30th, if the Supreme Court has not issued an opinion by June 30th. And you will be notified by your student loan servicers when that repayment is going to start. Having said that, at FAME, we are real advocates for being proactive. So we recommend that you make sure you know who your loan servicer is and confirm that your contact information is up to date in their records. you can log into studentaid.gov with your FSA ID and password. And if you hover over your name, which is in the upper right-hand corner, you can see dashboard. If you click on dashboard, then your loan servicer will be displayed on the right-hand side of the screen. Now, studentaid.gov is student aid, the federal government, that's their website, and when you received federal aid. This next bullet, establish your online access directly with your loan servicer. I just think that's really important for people to understand. I can see any loans in studentaid.gov, but I'll use an example. My loan servicer might be Mohila. So I'm going to set up a user ID and password at Mohila so that I can log in and make any payments and monitor my payments that are happening at Mohila. Now, when I look at studentaid.gov, I should see that balance changing over time, but Mohila is my student loan servicer, and that's where I'm going to see all that information. If you happen to be someone who's pursuing public service loan forgiveness, Mohila is the servicer for anyone who is pursuing public service loan forgiveness, and you can actually also see the progress you're making towards your 120 payments. I'm just using Mohila as an example, but there are other loan servicers out there. There's Nelnet, there's Student Aid or Student Aid Advantage, there's Great Lakes. So your servicer might not be Mohila. Mohila happens to be the one I'm most familiar with at this point. Make sure you do know when your payment will be due in the monthly amount. It's a little early to tell. When I log into my son's Mohila account, because he's my guinea pig, I can see that his payment says it's due September of 2023. But if the Supreme Court issues a decision in March, that payment date will probably be a lot earlier, but it would be within 60 days. So just, make sure your contact information is up to date. Make sure you know how to log into your servicer, log into studentaid.gov. Just become very familiar with how to access your information. Examine your monthly budget and make sure that you fit your monthly payment back into it if you haven't been making your student loan payments during the payment pause. And then certainly, please do not be afraid to ask for help. You can always email me if you have a question. You could always call our 800 number at FAME. But certainly call your servicer. There are things that they can do to help you. There are federal benefits related to economic hardship or a forbearance if you're having trouble making payments or fitting that payment back into your budget until you get on your feet a little bit. So just don't be afraid to ask for help. That's probably the most important message on that score. And last but not least, we want to make sure that you know the resources that are available to you. FameMaine.com. Obviously, anything that you might want related to student loan repayment or other tools, please come to our website. ECMC is actually free student loan counseling for Maine borrowers, and we work with Maine schools and in partnership with them to provide that counseling through ECMC. So again, just proactive counseling to Maine borrowers. And then finally, you heard me mention previously the Institute of Student Loan Advisors, which is Betsy Mayant's organization. Fabulous website, check it out. But then TISLA at freestudentloanadvice.org is their email. They do only provide counseling via email because they are a very small shop, but Betsy is a national expert. And so she has helped so many borrowers, especially during this time with the different waivers related to public service loan forgiveness or the income-driven repayment forgiveness. So I highly recommend the Institute of Student Loan Advisors. So that's actually my last slide, with the exception of our contact slide. So I will pause there. We've got about 10 minutes. I don't know if we have any other questions. I definitely recommend that you go to the January 25th webinar. When I send this out to you, I'll send you a link to this recording. I'll send you a copy of this PowerPoint, but I'm also going to send you a link to the recording from the Betsy webinar from January 25th because it's so important. So, when it's really super cold and you have nothing else to do, watch those webinars. And I will pause there. Mila, is there anything you wanted to add to the group today, or?
No, I just would really reinforce the asking questions pieces. A lot of us have worked in financial aid for, decades, literally, but we still have to double check with each other because there have been so many programs and they're so beneficial to so many borrowers, but we want to make sure that we're keeping it straight too. So please never hesitate to ask a question, to see if it's something you're eligible for, to ask about next steps, because we want to be sure that you are getting the information that you need because there's so much of it out there right now.
Thank you so much. My dogs did just start howling, so hopefully no one's hearing that in the background. But again, I just want to thank you all for taking the time and making the time to be with us today. Please feel free to share the email I send out to all of you with anyone that you think might benefit from having the information, or tell them about our series and they can join us. Oh, I'm so bad. I don't remember what next month's topic is.
Next month, I'm doing next month. We are talking about savings. I know we're talking about that.
Okay.
I think we're expanding beyond just savings, but we're going to talk about savings and the fact that it doesn't really impact on financial aid eligibility. And so the benefits of saving, and I think tips to help people figure out how to save.
Great, great. So Mila is a fabulous presenter. Make sure you join us the first Friday in March and learn even more. And please make sure you share your ideas for topics that we could cover that we haven't, or things that you haven't seen and you hope we would cover. So that's it. Thank you, everybody.